welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our technical experts today, Hemen Kapadia of KRChoksey, Amit Shah of BOBCAPS, and Aditya Agarwala of Securities join us on the show. Thank you to all for joining me on the show today. Today, instead of the normal fundamental picks, we'll talk about all the technicals of the stocks in the market. But first, Jayesh Khilnani is here. He tells us about a pattern that the Bloomberg terminal has thrown up on Asian Paints. Jayesh, so what is the chart showing on, what is the terminal showing on Asian Paints?
So Darshan, it's a sell call on Asian Paints as per the Bloomberg terminal. If we can have a look at the chart, I'm referring to the bearish engulfing pattern that is in play with regards to Asian Paints. Now first, what is a bearish engulfing is you have to watch out for a 2-candle chart pattern. So essentially what it does is you have to follow up on a green candle followed by a red candle, and bigger the red candle, the better the indication. So if you have a look at the last 2 candle formations on Asian Paints, what you can see is yesterday we had a green candle formation and today we have a red candle formation, and you can see that the body of this red candle is completely engulfing the body of the green candle. Now what has happened in the past is few instances where you have seen a similar kind of pattern formation. You see the EL marked by the red arrow, a red box over here. You see that post this pattern formation, the stock either goes into a consolidation phase or it actually declines. So we had in Feb where the stock actually declined. Now Darshan, what is interesting is in the last 1 year, if you had sold into all of these indications, net profit over the next 10 days would have been closer to 5% on every trade that it had hit.
Okay, so that's the view that's coming in on Asian Paints. I'll throw it up open to you guys. Hemen, let me start with you. Asian Paints, the Bloomberg terminal is indicating that, you know, the probability of the stock going down is increasing. What are your charts indicating?
I have a slightly contra view.
That's fine, that's fine.
Darshan, I think we're consolidating. If it's a sell, it's a conditional sell only below 1270. That is a stop loss. If you look at the weekly chart, it looks like the 4th wave that the ABC going on, the C is on. So, frankly speaking, currently it's in a no trade zone. Good about 1295, weak below 1270, buy at 1245.
Okay, so that's the view that's coming in on Asian Paints by Hemen. What's your view, Amit, on Asian Paints? What do you make of the chart?
So I agree to what he said. Definitely it's not a sell at this level, and also engulfing, the placement of engulfing pattern is very important. So which is happening at a consolidation phase, so would not treat as more important. It is more of a time consolidation and price consolidation which is happening right now. I'll definitely be a buyer if it moves about 1295.
Okay, 1295. And at this level, you would say that you would, if someone wants to trade Asian Paints, he should stay away?
He should wait.
He should wait.
He should wait for a confirmation to come in and then he can trade. But definitely it is not a short. Looking at the broader structure, these kind of structures normally tend to reverse very quickly.
Okay.
So if you respect the trend, then definitely it's not a short. You should wait for the right time to enter, that is about 1295.
Okay, 1295, so that's the buying stop loss is something that you're recommending for Asian Paints. And Aditya, what do you make of it? Do you agree with the other 2 gentlemen that, you know, it's not a sell and you should buy the counter? What's your view on the counter?
So as far as sell is concerned, I think it's too late to sell. So stock has made a double top at 1330. On a daily chart, if I look at the daily chart, stock has made a double top, which is a bearish sign. So if the stock makes a double top and starts to decline, that's a sign of bearishness. But if I take a look at the weekly chart, stock has strong support close to about 1270 levels. So unless stock breaks 1270, I won't go ahead and sell the stock because stock can bounce back from 1270. And as Hemen pointed out, it's more of a consolidation into 4th wave. So either I'll buy above 1325, 1330, that's the double top level, or I'll buy close to about 1270. But right now it's too late to sell because it's almost coming close to the support levels of 1270 to about 1260. So I would wait for the stock to come down to support levels and rather look to buy it.
Okay, so that's the view that's coming in on the first stock, even though that the Bloomberg terminal is indicating a sell on the counter given its parameter. Our guests here do believe that, you know, it's not a sell, it's mainly on a consolidation phase at this point of time. At lower levels, this stock should be accumulated, and if you're looking at a buying stop loss, about 1290 is something our guests are recommending at this point of time. But let's go across to the first stock that our guests are recommending. Hemen Kapadia has a technical chart on Stride Shasun. Hemen, we'll pull up the chart on the big wall and you can join me. What's your rationale? You have given a buy recommendation on Strides. So if we can have the chart up here, you can walk up here and just explain your rationale.
A couple of reasons why it's a buy. Darshan, firstly, the MACD is given a crossover buy.
Okay.
The stochastic also has given a crossover buy. If you check out the volumes are the highest in the history of Strides RQ Labs since listing. There's 11% open interest addition yesterday,
Okay.
which is a long build up. Oversold upward key reversal yesterday on the daily chart. We have a big fall to retrace. Everything seems to suggest that we are set for a bounce and a decent bounce at that. Darshan, the first target at 386 has already been hit. The second target is 399. The call was for 12 trading session. This happened a bit faster than expected. This is where we have some resistance coming in, Darshan, just plus 400. One gets the feeling we could come there, give a small cool off. It's not going to get over.
So this is the level you're saying that is the consolidation happened?
Yeah, and we could face resistance here, and beyond this we'd see a further upside. So the story is not yet over. I think it's going to give a decent bounce.
Okay, decent bounce. What's the target price and stop losses that you've recommended for the counter?
The call was given yesterday night, closing was 368, stop loss was 358, target was 388. Maybe we now need to upgrade the stop loss to maybe around 374. The target is 399, and I think a further target comes in at 411, Darshan.
411 is the next target. So the counter is already at 390. We're looking at 399 next, and 400. What's the indicator that you've used? Firstly, I want to understand that. And secondly, what is the risk on this? Is it a high risk strategy or is it a low risk strategy?
Oh, I think it's a low risk strategy. Looking at this, the pharma index has gone berserk. I think taking a slightly longer term point of view, 2009 to 2015, we had a 6-year uptrend. We have a 3.5-year downtrend. Pharma index has bottomed. It has probably started what is possibly going to be a 3-year uptrend. So one, we are playing with the sector. Okay. All the pharma sectors stocks have gone berserk. This stock is playing catch up. The indicator that I've given, I've used is the MACD, moving average convergence divergence.
Okay.
It's given a crossover buy, and Darshan, if you see, we almost touched the same low, but over here this is given a higher bottom. So this is also positive divergence on the daily charts.
Okay, so according to the MACD, Hemen is recommending buying Strides Chason at this point of time. A potential of 400 is something he sees soon on the counter. Thanks, Hemen, so much. Amit, I'll come to you. Your view on Strides. Do you agree with the strategy that it should be a buy? What do you make of the charts here?
Yeah, in fact, it is made a double bottom formation, and looking at the overall, most of the pharma space, most of the counters like Sun Pharma, Lupin, most of the counters had seen the reversal from the double bottom formation. This was a laggard among the entire pharma space. So definitely the risk reward looks favorable. If someone who's looking purely a pullback, I would definitely recommend this counter for 405, 420 odd target. If it sustains more above 390, then potentially it can head towards 440, 450 levels also.
What's the stop loss that if someone is looking at it, what's your stop loss for Strides?
So one can trail the stop loss to 385 for considering the most of the average time which is spent today would come around those levels. So that would be a key level to monitor. A sustained basis 385, if it breaks, then definitely one can consider to exit the short-term trade.
Okay. Hemen, just one quick question. Would you recommend someone to average this counter if it falls lower, or would you have a very strict stop loss to exit the counter?
No, I think there is cushion. And like I said, volumes are highest BSE, NSE since the listing of Strides. So obviously there is something which has happened which we are not aware of. So I think there's significant comfort in the trade. So normally I wouldn't advise inverted pyramiding, but in this case, if it comes off, yes, I think with the same stop loss one can average, because I still feel the bounce has a lot more headroom on the upside.
Okay. Okay, and Aditya, your view on Strides?
So I agree with the two gentlemen as far as Strides Chason is concerned. My only concern is the high. About a few trading sessions back, it made a high of 399. I would be more comfortable getting into the trade above 399, because that is one level from where stock came down. Intraday saw a sharp sell-off. So above 399, I would go long on the stock. I would place a target at 492. Definitely, there's a bounce back play in the stock. And as Hemen pointed out, there are good positive divergences building on the stock. After a sharp fall, stock is seeing a up move, and volumes are healthy. So up move, if it sustains above 399, I would go for a target of 492. Probably I'll keep a slightly deeper stop loss because of the volatility, the volatile nature of the stock. So I would probably keep a stop close to about 355 to about 352 zone.
Okay, so I think all three of our technical analysts, it's a consensus buy that they are recommending on Stride Shasun going ahead. We'll move on to the next stock, and Amit, you have Reliance for us. It's been trading at its lifetime high. You can join me here. Explain to us why you like Reliance, what's your target, and what's the strategy here?
So see, basically this entire stock, if you see slightly on a positional point of view, it has taken a good consolidation time, which is in the band of say 870 to 950 odd.
Okay.
And after this consolidation band, so mainly technical is all about time consolidation and the price consolidation, as the two axes suggest. So it has taken a decent level of time consolidation between this band. And if you see the fall which it had happened here, as per Fibonacci time series, the fall between this as well as the rise between the time series is quite equal, which is a good sign.
Okay.
The more it sustains above 995, 975 or 975 is a recommended stop loss, which is, if you see, the low which was close to here is a stop loss level for from where the stock can see some further breather.
Okay.
But one can play with 975 as a key stop loss level and look for target towards 1150 levels on the higher side. If I look at a slightly broader structure, looking at the overall time horizon, even 1250 levels cannot be a surprising target.
Okay. Firstly, which is the methodology that you've used, which is the parameter that you've used to identify Reliance, and in terms of further targets, you've said close to 1250. Right. Would you rule out any averaging? Would 975 be your strict stop loss there?
So if someone who is a short-term trader, then 975 can be a very good risk-reward level. But someone who's looking for slightly positional view to play for 1250 or higher levels, then I would recommend a 950 or a 955 level as a close stop loss. Okay. That would be close to the 50% Fibonacci of this rally, what it has seen from here.
Okay.
And the level what convinces more is the time series which I explained, and along with the rounding formation. Normally rounding formation is taken into importance when it is formed at the bottom. But even if this consolidation is considered to be a time element which has passed away, within that time element the consolidation or the rounding bottom has formed, that is itself in a positive side.
Okay. Is this a high risk strategy or a low risk strategy? Because the reason I'm asking is that, if someone who has limited capital or is a low risk trader, he might buy less of it, and if there is enough conviction in it, someone might buy high. So that's my duty to ask, is it a high risk strategy?
No, it is a low risk strategy. In fact, it is a low risk and a higher reward kind of a strategy, where I would say that if the pattern works out well, definitely the risk reward can be more than 1:3. So definitely I will rate as a low risk strategy, and definitely it can be a good positional trade as well.
Okay, many thanks, Amit. So it's the strategy that is. Hemen, very quickly, your target and stop loss on Reliance if you have one.
Looks good. 10-year breakout, 31-week consolidation, has given a breakout. The only hiccup, if any, is a 13% upside in the last 12 trading sessions. Otherwise, everything is hunky-dory.
Okay, very quickly, Aditya, your
if
view.
I can just walk out there to explain something that, so if I just join the tops, this is the daily chart, if I join the two tops, the previous two tops.
These two. Yeah, you can come here.
Yeah, thanks. Okay. So I'm talking of these two tops out here. So if I just join this top and this top, I get an upward sloping trend line, and today's high is exactly at that upward sloping trend line. So I would be just slightly skeptical. I would want to buy above that high of 1023. That levels comes to about 1023 to about 1025. So if a stock breaks out of that zone of 1025 to about 1023, yes, the uptrend will resume, and no doubt stock has been in an upward rising trend. It's making higher lows and higher lows. So no doubt stock is bullish.
Okay, so consolidated, hold on Aditya, your stock is up next. Consolidated view from all three of our guests is that Reliance is a stock that they would like. It's a bullish trend. And Aditya, what's your stock that you're talking about?
So the first stock I'm talking of is Mahindra CIE.
Okay.
So that stock, as you can, I belong to the old school. So stock making high rise, high low, I prefer that stock. So if you can clearly take a look at the stock has been in a strong consolidation phase. Right now, stock is making an ascending triangle pattern. So an ascending triangle pattern is generally a pattern wherein the highs are the same and the lows keep rising. So the moment stock breaks out of that ascending triangle pattern, it resumes its uptrend. So it's almost on the verge of a breakout. It almost did today, and it's back inside that range. So the moment it breaks out of that ascending triangle pattern, close to about 262 to about 265 levels, I think the stock will resume its uptrend. I'm looking at a good target of 290 to about 316 in the stock, keeping a time horizon of 3 to 4 months.
3 to 4 months. But if you see, it's pretty much even in the past, it's managed to hold on to this.
Yes.
What makes you think that this will break out?
So if I take a look at the RSI is pointing that it should break out from that zone because RSI has moved into the bull zone. So I look at the bull zone and the bear zone on the RSI. So recently what RSI has done is taken support at the lower end of the bull zone, that is 40, and then it has turned up. So I'm looking at a breakout on that, and the RSI is suggesting that the chances of a breakout are very high.
Okay, so that's the view that's coming in on Mahindra CIE. Thanks so much, Aditya. Hemen, very quickly, do you have a view on Mahindra CIE?
Yeah, I think the breakout comes in at 265. I'd wait for the breakout.
Okay, 265. And what about you, Amit?
Yeah, so structurally it is good. It is irregular cup and handle formation which has formed. So about 265, definitely it's one, but one can definitely preempt at this level and add more about 265 levels to get into a confirmation trade.
Okay, so 265 is the level that our technical guests are talking about at Mahindra CIE. So that's what we'll watch out for. Now again, time to get back to Bloomberg Edge, and Jayesh Kilnani is back with me. Jayesh, what is the terminal throwing up now?
So Darshan, it's PVR, the stock that we are referring to, and this time it's a longer time horizon because I'm referring to a weekly chart because the 21 period exponential moving average has got taken out with higher volume. So what the exponential moving average does is it assigns more weightage to the recent data, and therefore it reacts faster to the time prices of more recent data. That's the last couple of years of chart of PVR that you can see, and you can see that the last two candles we have seen the white candles, and the green line is the 21 period exponential moving average. With that we have actually taken, or it has, the price has surpassed, and the bottom panel shows you the volume indication, which shows that the last couple of weeks also the volume has been on the higher side, and in fact it has surpassed the 5-week volume average as well. Now in the past, if you had actually bought in all the indications, what you would have got is over the next 10 candles upside potential could be about 7 to 8% as per the back testing on Bloomberg.
Okay, so it's a buy call that's coming in on PVR at this point of time. Very quickly, Hemen, what's your view? Buy, sell, hold, or any target or stop loss on PVR?
18-month consolidation going nowhere. Strong resistance at 1470. It's forming an X wave. I don't think it's a buy. It will probably be a sell, but currently it's not even that, but it's definitely not a buy.
Okay, definitely not a buy. Amit, do you agree?
I will definitely not sell, but above 1470 it is a definite buy.
Okay, 1470 is something that you'll watch out for. And Aditya, very quickly, your view on PVR?
I would buy exactly above 1470 is a resistance zone, no doubt about that. But I would stick my neck out and buy the stock, keeping a stop close to about 1350. I think breakout is on the cards.
Okay, so that's the view that's coming in. Two of our guests do believe that above 1470 is where you should buy PVR. Aditya does believe that this is the level that it should buy. It's a risky bet that he's talked about. The Bloomberg terminal does show it's a buy. We'll move on to the second round of the recommendation of our guest. Hemen has a short-term bet on Tata Motors. Hemen, your strategy on Tata Motors. You can join me on the wall.
Yeah.
The stock is down. It's at 304. Yeah.
Yeah. So deep underperformer. Auto index has bounced back, done well. We've had one channel breakout. We had a bounce, didn't sustain. We've had another channel breakout. This time it sustained. It looks like it's forming a flag on the daily chart. Yeah. So this is your must. This is your flag. You add it to the point of breakout. It gives you the value. So a stop loss at around 298.50. Target of 321, and then beyond that there's even a higher target. So MACD is in a buy mode. The volume has dipped after it has gone into the flag, which is a good sign, and I'm anticipating a flag upward breakout from here. That's why it's a short-term buy as far as Tata Motors is concerned. For Darshan, and even from a longer term point of view, it's still going to take time and price, but this is probably going to be one of the long-term turnarounds on the charts.
Okay, so that's the view that's coming in on Tata Motors. It's a buy recommendation that's coming in from Hemen on Tata Motors. Is it a high risk or a low risk strategy?
I guess it's a medium risk strategy simply because the stop loss is closer. A little bit of high risk in the sense the turnaround isn't confirmed. There is little bit of anticipation on the weekly chart. The structure is steady or positive on the daily. We need some more time confirmation on the weekly. So it's a smaller stop loss and a smaller target.
Okay, so that's the view on Tata Motors. Very quickly, Amit, do you have a view on Tata Motors?
So for me, it is an avoid at this point of time. I would wait for some confirmation because the structure itself is slightly below 340 where the confirmation comes. So till the time it is not showing any triggers, I would wait for some time.
Okay, wait for some time. Aditya, very quickly, Tata Motors, your view?
I would go ahead and buy the stock because for me, I'm looking at a very long target of close to about 390 to about 400. So for me, it's a buy. Keep a stop close to about 350. It's a 260, sorry, and buy the stock.
Okay, so two of our guests do believe that Tata Motors is a stock that you need to buy. Hemen has obviously given the strategy on Tata Motors, but Page Industries has been a big outperformer. Amit, what's your view on Page Industry? Why are you recommending this as a buy?
So if I look at a slightly broader structure on the monthly chart, definitely it is a pure example of a Elliott wave where the third wave had already commenced, and this is more, I believe, 3 of 3. Where I believe the power of this wave is always the best power you can see in the entire bull run.
Okay.
The stock has given a monthly breakout with good volumes and open interest. If you see since the inception of the June series, the open interest has increased by around 30% odd.
Okay.
Day before yesterday, when it had given a breakout post the news which came in, the open interest at that point of time was close to 18% on a closing day, and plus it has given a breakout with a gap up opening. So the volume and open interest also do play an important role in terms of breakout at the right time. So on the monthly chart, it has given a strong breakout. I believe 25,300 will be a very good support level for this counter. Any dip in case if it comes towards 26,000 odd would be definitely a buying opportunity. Even someone can buy at these levels also, because I'm looking at a slightly longer target. My positional target of 32,000 remains intact.
Okay.
But someone who's playing for a short term, 28,000 to 30,000 can be a possible targets in 3 to 4 weeks time frame.
Okay, 3 to 4 time frame. Any hard stop loss on Page Industries?
I would not keep any hard stop loss, but I would always look any dip to as a buying opportunity or a re-entry point.
Okay, so that's the view, a positive view coming in on Page Industries. Even looks at target at 28,000 to even 30,000. Hemen, do you like Page Industry? What's your view?
Clear Elliott wave impulse. No brainer, looks good.
Okay, looks good. What about you?
Definitely a buy.
Okay, so it's a 3 thumbs up that's coming in on Page Industry. It's definitely a buy. And the last stock that our experts will discuss is AIA Engineering. And that is what Aditya is speaking about. Aditya, explain us your rationale why you like AIA Engineering.
AIA Engineering again is on the verge of a breakout from an ascending triangle pattern, and post a sharp up move, stock went into a minor consolidation, as you can see from here, and it's on the verge of a breakout from that ascending triangle pattern. On the daily chart, it's already broken out from a bullish flag pattern, so an up move has already started on the daily chart. On the weekly chart, definitely it's on the verge of a breakout, but if I take a look at the candles out here, post following a sharp big bull candle, there are 4 small consolidation candles. So the moment it breaks out of that consolidation, the extension of the up move will be there on the chart, on the cards, and the moment it breaks out, it will be tough to catch. That's why I'm catching the stock slightly ahead of the breakout, because the moment it breaks
what's the breakout level?
So this close to about
this red line?
Yeah, 1645.
So if it breaks out, what's the potential target that you see?
So I'm looking at close to about 1850 to about 2000 levels on AIA Engineering if I keep a time frame of 3 to 4 months.
3 to 4 months.
Yes.
And is there some stop loss? Is this red line the stop loss that you would have?
This red line as the stop loss.
What's the number?
Close to about 1385.
1385. So AIA Engineering, Aditya says that he believes that if this red line is broken, there could be more potential upside. But since he is bullish on it, he wants to catch it at that level. Amit, any view on AIA Engineering?
I definitely like the stock, and it is definitely more of a CAGR story where it can see a consistent rally on the upside. So pure investment stock and definitely a good buy.
Okay, good buy. And what about you, Hemen, AIA Engineering?
Yeah, it looks good. Breakout 1610, support at 1520, 4th wave on the weekly chart looks good.
Okay, so it's a stock that looks good. Thanks so much, Aditya, for explaining the chart. And finally, the last chart that we want to highlight is something that the Bloomberg terminal has thrown up this time around, and it's Cipla. What is Jayesh? What is the terminal throwing up on Cipla?
So Darshan, Cipla has currently breached the overbought level on the RSI. So if you have a look at the chart, what relative strength index does is measures the momentum behind the price moves, and it also shows you where the overbought and oversold levels are. So anything above 70 is overbought, and anything below 30 is oversold. Now, if you look at the chart recently, what has happened is, with yesterday or today's price movement, the RSI has in fact gone above the 70 level. Now, interestingly, what has happened, if you look at some months back, and if you join the top of November to May, what you will see, the red line, that could prove to be a resistance level going ahead for the stock. Previously, what has happened in history, whenever the RSI has become overbought, you can see these red arrows. Those have given you corrections of about 5 to 15% on each of the trades that got initiated.
What is the probability of success in this, Jayesh?
You can see, in the last 6-7 months, thrice it has hit this level, and all 3 times the stock has declined. To what extent that
if you backtest it is what I mean.
So that's 6% on each trade.
Oh, 6% on each trade. So the Bloomberg terminal believes that there's resistance that coming in, and if the counter falls, it could give you 6% gains. Hemen, your view on Cipla?
Yes, I think, but frankly speaking, I'll have a neutral stance. There's resistance at 620. Currently, the impulse wave is on. Little bit of an upside. It's too early to short, too late to buy.
Okay, too early to short and too late to buy. What's your strategy on Cipla?
So I have a simple saying that should never sell on resistance, sell on weakness.
Okay.
Never buy on support, but buy when there is strength.
Okay.
So I don't see any kind of weakness in this counter, though there is some resistance, but resistance can always be taken off.
Okay.
So minor trend is positive, trend is a friend, so I will never short at this level. I would wait for some confirmation, and in fact I would look on the positive side of the stock once the development is seen on the primary structure.
So if this resistance is taken out, what potential upside do you see?
So see, the way it has moved from 540 to 604, price-wise it has moved, time-wise it needs to consolidate. I'll wait for some consolidation to see at which level it is consolidating. It has given a breakout above the 200-day moving average with good volumes. So definitely I'll wait for some time consolidation, and once the formation is formed, then maybe I can be in a better position to answer at which level we can re-enter.
So Cipla, not a short according to Amit. And Aditya, finally, your final thoughts on Cipla?
So I wouldn't short as well, just because it's standing close to about a resistance zone doesn't make me go ahead and short the stock, because I don't see any weakness. So price wise there's no weakness, just standing at a resistance. What if the resistance takes out, stock can see up move to 640 to 645 levels.
Okay, so that's the view that's coming in. All 3 of our guests do believe that it's not a position, it's not in the right time that Cipla needs to be short. But with that, it's a wrap on today's Hot Money. Thank you so much, Aditya, Amit, and Hemen, for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.